Good morning. It's Tuesday, September 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. This is the 484th episode of the Metals Minute, and the Bears, they do stink here, dropping to the Minnesota Vikings here with J.J. McCarthy leading the Vikings to that comeback win here in his NFL debut, so congratulations to him. Now, looking at bond yields, they continue to dump, but they are testing some key levels. If you do get the chart back here, take note of the 10-year yield. If you'll see those September, the October lows, you connect that with the April lows when that tariff flurry was unfolding here, and then we're coming back up to this critical support zone heading into the CPI report here tomorrow. Now, will CPI mark the top here in the metals markets, in the U.S. equity markets? Well, we are anticipating that CPI does edge higher and could potentially erase the expectations for that 50 basis point interest rate cut. However, regardless of what happens here with CPI, we do anticipate that the Fed will cut 25 basis points at that September meeting. Now, looking at the gold market, total gold held by ETFs, well, that rose about 13% this year on up to 94.4 million ounces, and it's the highest level since May 31st, 2023. Gold's up about 39% this year and tacked on about 1.4% in yesterday's previous trading session. I'll be on Yahoo Finance later on today in the afternoon between 2 and 3 p.m. Central Time here, giving a breakdown on the precious metals, on gold, on silver, on copper. So tune into that if you watch that particular program. Looking at the overnight in the U.S. equity markets, we do have stock futures. They are edging higher after closing right near those record highs. The S&P 500 is up just about 0.1%, and the NASDAQ up about 0.2%. The critical level on the S&P is really closing over that 65.05. If you'll note that JP Morgan, one of their funds is short about 33,000 contracts of that end of the month S&P 500 6505 call. So it's a critical level here where those option dealers are going to have to adjust if we start to see a series of closes above that level. Will they roll those positions higher? That's a big question out here, and will they hold that into the CPI report? Now, the miners are in focus after Anglo American agreed to acquire Canada's Teck Resources, one of the biggest mining deals here in more than a decade. And you have mutual funds, and this is why the dip buyers are very active in the U.S. equity markets, frustrating those bears and frustrating the dip buyers here that are looking for entries into some of the precious metals markets because of the fact that mutual funds are sitting on a record $170 billion in cash. So the dip buyers, they are waiting. Looking at some sectors in focus in European trading, we got French stocks. They are leading the gains here across the European benchmarks. There was a lot of concerns about that French no confidence vote. We saw a little reaction here in the European currencies here, and then also in the European stocks. Asian trading, you got Asian equities, they are advancing as tech and Chinese property stocks, they are continuing to climb. The MSCI Asia Pacific Index rose as much as 0.8%, and it's the highest level since February 2021. Really, you're going to want to look out. If you are a bear on the markets, you want to track Chinese growth and Chinese imports and export data because it's starting to slide lower here. And when you look out into 2026, I believe that U.S. equity markets are going to continue to put the afterburners on. However, you're going to see China start to go into a deflationary type of environment and really a big slowdown there. And will that drag the U.S. equity markets lower is the big question. So looking at the CME's Fed Watch tool, remember that meeting September 16th and 17th, the Fed is in this external blackout communication period, which they run about the previous 2 weeks here leading up to any kind of Fed meeting. They don't want to tip their hat or reveal any cards as far as what's in their playbook here. And they've got an 88.2% chance of a 25 basis point interest rate cut. You've got an 11.8% chance of a 50 basis point cut. And I think that that's where that starts to disappear here as this CPI data starts to edge higher. So checking in on the commodity price action, Goldman Sachs saying that the precious metal in gold could reach $5,000 an ounce if investors shift their holdings from treasury to the bullion. So what they're looking at is individuals, private sector, holding a bunch of treasuries here. And what happens is they're looking to see, will they sell some of those treasuries out, and will they continue to add to the gold market? And one little shift like that could really push gold prices higher. So if you look at the exchange traded funds, they added about 590,000 165,000 troy ounces of gold in the previous session. And you go to silver, well, they cut about 165,000 troy ounces of silver holdings. Silver traders recently have been more momentum traders, looking at breakouts, working a lot off of emotions here. If you saw that close over $42, I anticipate that the first time you see that, you'll probably see them take some of that off as far as the ETF flows back out. And if you get the 2-day close above $42, well, the chasers will return back to that market. And that's where I think that we could quickly move up to something like $43, $44, where we'll not run into another resistance zone. Remember, I've been dealing with futures and commodities for about 25 years. I've worked in this industry here as a licensed commodity broker since the early 2000s, and I've traded the precious metals markets exclusively for some of the largest futures and commodity trading companies out there, ran some of the largest trading desks with this as far as volume and number of contracts being traded here in the precious metals market. So I've really seen and monitored every tick per se as far as what's been going on in these particular commodities, especially the metals, the energies, the US equity markets, and the currencies and the interest rate products quite extensively here since the early 2000s. So if you do get the chart pack, something I'm going to note is that the September lows, the April lows, and then you come up to the September lows again on the 10-year treasury yields, where we're coming into a critical trend line here. And then you start to look at things like copper edging just ever so slightly higher, starting to put in a series of lows in on the chart. Really needs a catalyst to break out to the upside over about the 465 mark, where I believe that that will start to attract more traders back into that market here, as copper's been left for dead. Your critical support level on the platinum market right around 1375, having a lot of people have quite a bit of interest in that market here. The silver market kind of consolidating sideways with this bull flag formation occurring. 41.15 in the low 41s, your critical level of support on that market here. And really, like I said, you want to see that close on up over that 42 mark. So if you guys got any questions, you want to open up a futures trading account with us, shoot an email at info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.